Are you tired of paying so much taxes? Watch this video if you want to learn about the top 20 tax credits and deductions that will help you keep your money in your pocket. Just in case you aren't already aware of the differences, a tax credit is a dollar-for-dollar reduction in the amount of tax you owe, while a deduction reduces your taxable income, so you effectively get a percentage back depending on your income. So, a tax credit is generally more valuable than a deduction. It is possible to claim a wide variety of credits and deductions. Here are the top 20 you will need to know when filing your taxes in 2023. We'll look at 9 credits and 11 deductions. Taxpayers who have dependent children under the age of 17 and make under $400,000, filing jointly, or $200,000, other filers, can claim the Child Tax Credit, CTC. It is designed to help offset the cost of raising children and can be worth up to $2,000 per child. The Child and Dependent Care Credit, CDCC, is meant to help with the costs of caring for a child under 13 years old, a spouse or parent who can't care for themselves, or another dependent, so that you can keep working. Up to 35% of $3,000 for one dependent or $6,000 for 2 or more dependents is generally covered. The American Opportunity Tax Credit, AOC, lets you deduct the full first $2,000 plus 25% of the expenses in excess of $2,000. The maximum annual credit per student is $2,500 for qualified education costs like tuition, books, equipment, and fees. It does not cover living expenses or transportation costs. You can claim a maximum of $2,000 in tuition and fee deductions, which is 20% of the first $10,000 you spent on education. Both the American Opportunity Tax Credit and the Lifetime Learning Credit don't count costs like food, lodging, and transportation. Expenses associated with adopting a child are covered up to $14,890. If your modified adjusted gross income in 2022 is more than $263,410, the credit will begin to fade out and will be eliminated entirely. You may qualify for an Earned Income Tax Credit, EITC, of $560 to $6,935 based on your family's income, filing status, and the number of children you support. If your adjusted gross income is below $59,000, you might want to look into this. The Savers Credit covers 10% to 50% of contributions to qualified retirement plans, such as IRA, 401k, 403(b), and others, up to $2,000, $4,000 if filing jointly. Solar water heaters and solar panels, which use solar energy, can get a 30% residential energy credit. If an average solar panel cost you $20,000, you would get a $6,000 credit. For the tax year 2022, the electric vehicle tax credit is between $2,500 and $7,500, depending on the vehicle's weight, the manufacturer, and whether or not you own the car. Note: the credit was made much bigger and made available for used cars for the tax year 2023, returns filed in 2024. Taxpayers can deduct up to $2,500 in interest payments made on student loans. If you itemize your deductions, you can take money or things like clothes or a car that you gave to charity off your tax bill. Generally, the IRS allows you to deduct up to 60% of your AGI. Unreimbursed medical expenses in excess of 7.5% of adjusted gross income are tax deductible. You can deduct up to $10,000, or $5,000 if filing separately, in property taxes, state income taxes, and/or municipal sales taxes. Homeowners who qualify can reduce the amount of federal income tax they owe by deducting the interest on mortgages up to $750,000 from their taxable income. Contributions to a traditional IRA may be tax deductible up to $6,000, $7,000 if 50 or older, though whether or not you or your spouse is eligible for a retirement plan at work and the amount you may deduct are both factors. Money put directly into a 401k is exempt from income taxation by the Internal Revenue Service. The limit for 2022 was $20,500, $27,000 if you were 50 or older. Those who are self-employed have the option of opening their own 401k retirement account, but employers typically provide these. The money you put into a health savings account, HSA, is tax deductible, maximum of $3,650 for single filers and $7,300 for joint filers, and any withdrawals you make to pay for medical bills are also free of taxation. Tip: while your money is sitting in your account, you have the option to invest it to make more money before you withdraw it. Independent contractors, freelancers, and others in the self-employed sector can take advantage of a wide variety of tax breaks. Ask your accountant for more details. The IRS lets people who work for themselves deduct some costs like rent, utilities, real estate taxes, repairs, maintenance, and the like if they use a part of their home for their business. Teachers and other qualified educators can write off up to $300 in classroom supply costs in 2022. We hope you found this video educational and valuable. Don't forget to ask your accountant about these credits and deductions to maximize your returns. Thanks for watching, and we hope to see you in the next video.